Greetings, folks. This is DC Investing. I've reached financial independence, and I'm talking about topics that may help others on their path to financial independence. And today, my topic that I thought I'd share is my progress on a margin investing strategy that I'm toying with right now. And my plan, if everything goes the way that I intend it to, will be that every year I will earn $4,000 by the stocks that I have chosen to invest in. And so I thought I'd share that with you. I know that margin investing adds some risk to your overall investing strategy, but it also has the ability to increase your gains. And so if you're interested in my strategy or what I'm doing with margin, listen on, and I'll tell you what I'm doing, and you can evaluate for yourself. But basically, how this happened was during April, when the tariff tantrum happened, a bunch of my energy stocks that I own dropped considerably, and I took this as a temporary opportunity to buy as much as I possibly could. And I had, I don't know, $30,000 of cash in my brokerage account, and I invested pretty much all of it. The types of things I invest in are not easily held within a retirement account. I did have some more cash available in the retirement accounts that I could have put to work, but I really like master limited partnership pipeline companies. These are midstream energy companies, and the reason why I like them is they have really high dividends. They basically pay out the funds that they earn in a year's time. They pay them to their shareholders, and it's a segment, excuse me, a segment of the market that has a much higher passive income stream than stocks typically do. And so I wanted to buy more of these, but I was just out of money. And so I looked into um, purchasing on margin through my Fidelity account, and I've used Fidelity for a long time. I really like them, but they have kind of a high margin rate. Their base rate is something like 12%, and if you buy, if you have over 500,000, it goes down, or over $1 million in margin interest, I think you can get down to about 8.25%. That really was still too high for me to be interested. Now I have heard that you can call up Fidelity and ask for a lower interest rate, but I haven't tried it, so I don't know for sure. But what I became interested in is Robinhood, and I had watched the whole Robinhood fiasco when they stopped the sell button for GameStop, and knew a bunch of folks really kind of struggled with that. And so I'm wary of them, but the stock's going up quite a bit right now, and they're probably fine to use. So I'm going to dabble with Robinhood. So basically, I took from my brokerage account, I moved over in pieces, chunks, and just to try it out. And I've got $200,000 that I've invested in Robinhood now, and I'm using those funds to form the basis of margin. So, I had these funds already. I just moved over things like Kinder Morgan and One Oak, and some other things that I'd owned. So I had $200,000 that I moved over there, which gives me $200,000 of margin. And I have thus far invested or taken about $120,000 of my overall margin amount and invested that in some more of these pipelines that I like. And so, what's happened so far? So the strategy is that the things that I'm investing in have high dividend payouts. So I own a company called Western Midstream, and I bought it in chunks, but basically I have $60,000 invested in Western Midstream now. That ticker is WES. Plains All American, that ticker is PAA. I own 32,000 of PAA. DKL is $1,000. So it's not a big one, but it's done really well. USAC is $10,000. WLKP is $10,000. And BSM is, I think, $6,000. So the reason why I chose all of these is because of their their dividend yield. So when I bought them, they were all over 8.5% of a dividend yield, and Western is more like 9.5% or higher. And I'm kind of watching it as if it goes down, I pick up a few more shares. If they go back up, I don't buy. But I'm using a dividend arbitrage strategy. So if on average I'm getting 9% in a dividend yield from these particular stocks, then I can use those dividends to pay back the interest on the margin loan. And like I said, I moved to Robinhood because they have one of the best margin interest rates in the whole industry. I think both Robinhood and Webull are the lowest. And you start off at Robinhood at about 5.75%. And then you get over 50 grand or something, it goes to 5.5. And then if you go over $100,000, you go to 5.25%. So I'm now over $100,000. So basically I'm paying 5.25% of a margin loan rate, but the stocks that I bought on average have a 9% return. So that arbitrage gives me, what is that? Almost 4% of a difference. Um, so I'm using that, and then over time, that dividend arbitrage will pay back the margin and buy more shares. So, if you use the law of 72, if you divide the number 4 into 72, that'll tell you how many years it'll take for you to double your funding. And it turns out to be, I can't remember, it was like 18 years or something like that. But if you reinvest the difference, this 4% every year, and instead you buy more of these pipeline stocks, what happens is that 4% the first year, you own the shares, but then each of those shares also gives you another 4% of an arbitrage. And so I kind of put this into a spreadsheet. I'm like, hey, what happens over time? How long does it take for this strategy to break even? And it turned out to be near 10 years in a time frame to where if you borrow, like let's say you borrowed $100,000, you reinvest the dividends, each year you get a payout 4% higher than what it costs. It takes about 10 years of a time frame before you own 100% of those shares free and clear. And so, it's interesting because I did this for any particular amount. So if you borrowed $200,000 and did the same strategy, again, about 10 years time with dividends reinvested before you get your full $200,000 value. If you borrow $500,000, takes you 10 years to get $500,000. If you borrow $1 million, takes you about 10 years time. So it's kind of interesting because what the numbers say is that the more you borrow with this strategy, the higher your eventual return will be. Now, I am not a high risk investor, so I'm not going to take this to extremes. I think my goal is to eventually have $200,000 in margin of a margin loan that I'm going to use for this overall strategy. And, that's just a smaller percentage of my overall account. So, you have to worry about margin calls. If the market dropped like it did in the COVID 2020 timeframe, I may have to add some more funds to this account. But overall, I've got a safe difference between what would cause a margin call or not. But it's just interesting. I wanted to toy with it. And so I am trying a margin strategy. So thus far, I started about 4 months ago, and I thought I'd give you an update. So my margin interest over this time has been $1,491. So that's how much I've had to pay for this loan above 100,000. It didn't start that way. I kind of did a chunk of like 20 grand and then 50 grand and then 80 grand. And, I was trying to get over this $100,000 mark because it lowered the interest rate by a quarter percent, which was really good. So over that time, my dividend yield has been, let's see, $3,308. So I've received more in passive dividends than I had for the cost of this margin loan. So that's a difference of about $1,817 over the course of 4 months. Now, eventually it looked like I would make $4,000 of a difference. And so the reason why that isn't is as high as it is because I bought some of these stocks kind of right before their ex-dividend date was occurring. And so typically you would have 3 months of a margin expense and get a dividend. But some of these I had purchased just a month before or even right before. So I kind of got my first dividend payment right away, which kind of makes a little bit of a difference. And so I do kind of consider that, hey, how long is it till dividends get paid out? And if I'm just going to do the pure margin investing strategy, you can kind of wait as long as you don't think the stock is going to appreciate. You wait till right before next dividend date, then you buy it. So you kind of get 3 months of a bonus before you have to pay the margin interest. So I've done this for about 4 months and made $1,800 ish on this dividend arbitrage, and that will continue through the year. And by the end of the year, I expect that I'll have about $4,000 of a difference between what the margin cost me versus what I get paid out in dividends. And so it's an interesting strategy. You guys could potentially try it or use it. Now, the pipelines that I own, you get K1 statements. They're master limited partnerships. They pay return on capital. You got to kind of understand how to enter those in your taxes. I really like the return on capital because I still have a fairly high income right now, and I like not having to be taxed now on my dividends. I'll get taxed if I ever sell these shares at some point. So that's a benefit. So if you have any other notes here on this, overall, let's see, I think I told you about how much that I had and all the different stocks that I owned. Each one has their own dividend payout ratio. I like them all. I kind of tried to spread my funds out over multiple things so that you kind of reduce any single stock risk. I definitely weighted heavily in Western Midstream. They are the pipeline company for Occidental Petroleum, OXY. That's the oil company that Warren Buffett's buying a bunch of. I think he owns like 25% of the company right now. So I don't know if that's a risk to Western Midstream or if it isn't. I've heard that Occidental might be trying to divest Western so they can pay off some debt. But who knows, maybe Warren Buffett will buy Western Midstream Partners or his, I know he's retiring now, so his generals might. Don't know. I definitely could have some risk in this, but right now the dividend rate is about 9.5%. And I'm definitely using that at this moment to do this dividend arbitrage strategy. Now, whenever you do a strategy for dividend investing, you got to make sure that your NAV does not reduce. So I've seen various folks that are trying covered call fund strategies, and the share price has gone down over time. And they say, if you rebuy shares with some of your dividends, that it kind of fixes that issues. But I don't know. The things that I have toyed with, I end up losing more over time than I gain because of the NAV erosion on your shares. So just be careful if the idea of, hey, you can earn more in dividends than you have in your margin, you can get bit by that. And so I have tried these pipelines because I think they're a growth story as well, because AI needs energy. And so the best chance to quickly bump up our energy structure is to do natural gas powered data centers. So I think all the pipeline companies are going to have a growth spurt as the different utilities need more natural gas, and the data centers need more energy. And so since this time, all of these shares have kind of appreciated. I kind of summed them all together. Each one's kind of up. I think one of them's up like 12%. But overall, all of them together, I think I put the downer up 3.62% over this 4-month time frame that I've owned them. A while ago, they were up about 10%, but the pipelines kind of got a little squishy as the economy kind of looks a little weaker through the summer here. But right now, over 4 months, capital gains, I'm up 3.62%, and the dividends, I'm up, what was that, $1,800 or something. And so thus far, it's working. Things can always get destroyed later on, and I'm weary of what could happen in the future. You always got to be prepared for that. If I got a margin call, I've got funds that I can put back in Robinhood so that, that fixes that. I think I have like a 50% margin rating safety right now. So I'm not worried about that. You never know, things could fall apart. Um, something could happen, war could break out, or I don't know, all kinds of stuff could happen. So just be wary of that. But in general, my margin strategy is that I should make about $4,000 this year from this margin strategy by borrowing other people's money, investing it wisely, I hope, and then I'll use that $4,000 to repurchase more shares, and slowly over time, the margin loan will buy those shares for me, and thus I'll have an extra $100,000 that I did not have to work for. So there's the benefit behind this strategy. So, before this time, I was very risk averse. I do not use debt. Paid off my house early, paid off my cars. I have no credit card debt, no debt, absolutely, or overall. So this is a new thing for me. But there is such a thing as good debt, where you're buying assets that then make you more money. So that's why this strategy, I'm gonna try it with a portion of my stock account. Um, it's a risk, but I think I can cover that risk, at least right now, and thus far it is working. So just be wary. Don't go overboard with margin. You can get hurt by it if you're not carefully using it, but it can definitely amp up your gains. Now I must say that, had I made some other choices, I could have done really well with this margin loan. So, if I had bought CoreWeave at the IPO, it went up 4.5 times, 400%, came back down again. But hey, if you bought it and invest in the right thing, you could do really well with a margin loan. What else did I kind of watch? Palantir is up, GE Vernova is up quite a bit. Even just like the NASDAQ triple leverage fund, the TQQQ, is up 100% since the April lows. So, it's kind of interesting. If you make the right choices, you could do much better than my little 4% margin increase. But I'm kind of more conservative, and I want more of a sure thing, at least what I think is a sure thing, as opposed to some wild guess on something. And so, I know margin can be interesting. And right now I've heard that, there's higher margin debt than there's ever been before. Part of that is because, inflation is higher than it's ever been before. And, money has to inflate or our whole system collapses. So, those are some thoughts. I'm just kind of rambling on the end here of stuff that I think might be of interest to you. Be careful with margin, but, it is other people's money. It can increase your gains. It can also increase your losses. So you have to be right on your choices. Otherwise, you can lose more. So let me know if you guys use margin, what you think about it, if it's helped you, if it's hurt you, share with this community, and we'll all learn together. Again, DC Investing, and enjoy your day. Bye.